What if I told you 3 companies quietly sit behind most of corporate America? Not running it, not managing it, but owning it. BlackRock, Vanguard, State Street. Together, they manage more money than most countries produce in a year. They don't build cars, they don't sell phones, they don't operate airlines, yet they own pieces of the companies that do. This is the mystery of shadow ownership. Over the last 20 years, something subtle happened. Millions of investors stopped trying to beat the market. Instead, they bought index funds. Simple, cheap, efficient. Funds that buy everything, the S&P 500, the total market, sometimes the entire world. And as trillions of dollars flowed into those funds, ownership concentrated. Quietly. Look at the largest corporations in America. Tech giants, banks, pharmaceutical companies, energy firms. Then look at their largest shareholders. Again and again, the same 3 names appear. Not majority owners, but almost always in the top 3, always in the room. Here's where it gets interesting. Ownership means voting power. When shareholders vote on executive pay, mergers, board appointments, or corporate policies, those votes matter. Most everyday investors never cast them. The asset managers do it instead. With a single decision, they can influence millions of shares at once. No headlines, no dramatic takeover, just influence at scale. Now, take it one step further. In many industries, these firms own significant stakes in competing companies at the same time. Airline and airline, bank and bank, soda and soda. Economists call it common ownership. If the largest shareholders of competitors are often the same institutions, does competition change? Some studies suggest prices could rise. Others say the impact is overstated. The debate is ongoing, but the structure is real. 3 firms sit near the top of shareholder lists across corporate America. Individually, they don't control most companies. Collectively, they are nearly impossible to avoid. During financial crises, governments dominate the headlines. But behind the scenes, asset managers become systemically important. In 2008, in 2020, when markets strained, liquidity and stability depended on institutions managing enormous pools of capital. Too interconnected to ignore. Assets under management surged into the trillions. Active fund managers shrank. Passive giants expanded. Scale became power. Executives meet with them. Boards listen to them. Annual letters outlining expectations for governance and long-term strategy ripple across markets. Not because of force, because of ownership weight. Now, to be clear, this is not a secret conspiracy. These firms don't own the money. Their clients do. They are fiduciaries, legally required to act in investors' best interests. There is no hidden control room. What exists instead is structural concentration, the natural outcome of millions of people choosing the same investment strategy. But here's the paradox. When ownership becomes universal, influence becomes centralized. Power without visibility, presence without spotlight, a role in nearly every boardroom, yet rarely the focus of attention. Some critics warn of systemic risk. If one faltered, the ripple effects could spread quickly. Others warn of political implications, corporate governance shaped by institutions no one elected. And others argue the opposite, that these firms are stabilizing forces, focused on long-term value rather than short-term speculation. All of those arguments contain truth. Recently, there have been moves toward pass-through voting, giving investors more direct control over how their shares are voted. It's a small shift, but it suggests the structure isn't fixed. For now, though, the pattern remains. 3 firms, thousands of companies, one deeply interconnected system. They didn't seize power. It accumulated, slowly, quietly, one retirement account at a time. No villain, no dramatic takeover, just the mathematics of scale. And in that scale, a new kind of influence emerged. Not loud, not obvious, but undeniably present. So the question isn't whether the shadow exists. The question is whether it matters. And that is up to you to decide.